Welcome to ISE's FX Options Weekly Outlook, a weekly outlook on the US dollar versus the major currencies, hosted by Jason Ayres, a top industry instructor and founder of OptionSource.net. Learn to trade your views on the strength or weakness of the US dollar.
Well, hi there and welcome to the ISE FX Options Weekly Outlook for January 19th to the 24th. I'm your host, Jason Ayres, founder and president of OptionSource.net, and as always, we're going to start with a look at our weekly U.S. dollar index. Now, the U.S. dollar continues to strengthen overall against most currencies as last week's action rallied the index into that 84-85 focal zone. Now, this area remains a key level of resistance, and we are cautious of a natural retracement back down into test this 81-82 range. Momentum continues to support a bullish sentiment, and although we are likely to see some consolidation within this current area, a close above 85 opens the window for a test of the previous highs scattered across this 88-89 focal zone. Now, a quick look at our daily snapshot illustrates last week's strong rally into this 84-85 range and clearly depicts the consolidation currently taking place. Contributing to the strengthening of the index was the strong rally of the U.S. dollar against the Canadian dollar, as seen here in the ISE FX Options Pair Value CDD. Now, last week we identified the 122-124 focal zone as an important upside target. However, it is clear that the target was exceeded as the CDD tested as high as 127. Currently, we are witnessing a slight pullback as the pair value looks for support in the upper range of this focal zone. If the CDD holds here, a break and close above 125 opens the window for another test of the 128 to 130 focal zone. Now, failure to hold this level here within the 122 to 124 range will have us targeting the 114 to 118 focal zone on the downside. Well, the U.S. dollar continued to weaken against the yen as seen here in the YUK. We saw a slight retracement towards the end of the week, which brought the pair value back into the 90-91 focal zone. Now, this range represents a natural resistance level, which suggests that a test back down to the 88-89 focal zone is a distinct possibility. A consolidation within this 90 to 91 range and a close above 91 will support a move towards our next focal zone within the 92 to 93 pair value range. Next up, the EUI, the US versus the Euro, most closely reflecting the index. The EUI pushed higher to test the 76-77 focal zone. Now, Friday's close clearly showed signs of a rejection here, and any bigger picture retracement is likely to migrate south towards that 72-73 pair value range. Of notable importance is this 74-75 box, which represents a natural retracement on the shorter time frame. Now, if the EUI holds here and subsequently rallies above the 77 pivot, then that will open up the window for a test of the intermediate term highs within the 79 to 80 focal zone. The BPX, reflecting the U.S. dollar against the British pound, continues to be range-bound as we once again witnessed a strong rally into the 68-69 resistance level, only to see the pair value reject back down to test the 66-67 range. Now, the strong bounce on Friday suggests a conviction to the upside. If the BPX is able to push through the 68-69 resistance level, then the 71-72 box reappears as a viable upside target. Rejection here will support the higher probability of a test back down to test the lower end of the range in here at the 64-65 focal zone. And finally, the AUX, representing the U.S. versus the Australian dollar. And after a strong rally, the AUX pulled back to test support at the 146-148 focal zone. If the pair value can hold this range, we'll be looking for a test up towards the 152-153 focal zone. Now, a breakout above 153 will have us targeting the 156-158 area on the upside. Further weakening is likely to settle within the 142-144 focal zone. All right, let's take a look at a few of our key points. First of all, the U.S. dollar index continues to show strength. However, the 84-85 focal zone still remains an important level of resistance. A test of support at 81-82 would not be surprising. Momentum indicators continue to suggest a bullish sentiment. The CDD, EUI, BPX, and AUX are showing signs of a retracement after a very bullish run. Further consolidation within these zones is expected. We are watching for key pivot breaks to confirm any directional bias. And finally, the YUK is testing a retracement level to the upside after continuing to move inversely to the rest of the pair values. As with the others, we are watching to see if this short-term retracement level holds. However, a test back down to 87.88 appears to be a strong probability. And this has been your ISE FX Options weekly outlook for January 19th to the 23rd. I'm your host, Jason Ayres, founder and president of OptionsSource.net. Thanks for joining me here this week. We'll see you here next week.
Thank you for participating in this week's session. Please join us again next week. For more information about Jason Ayres and to sign up for free FX Options trade alerts, just visit www.optionsource.net. To learn more about ISE FX Options, including our weekly webinar series, visit us at www.ise.com/fx. ISE FX Options can easily be traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.